Good morning, good afternoon, everyone. Thank you for joining our April episode of ARIVE Partner Spotlight. ARIVE Partner Spotlight is a monthly webinar series that we host where we invite thought leaders from the mortgage lending community to talk about topics that are relevant in today's environment. Now that the March Madness is over, congratulations, Huskies and Gamecocks, for their remarkable wins. And the big solar eclipse is behind us. We are truly delighted to have a power panel joining us today. So we truly have really esteemed guests, including broker partners, one of our newer lenders, Power TPO, contract processors, where they are going to talk about a very important topic in today's market. How do people, process, and partnerships work together so that we can grow our business and meet our goals? My name is Harish Tejwani. Me and with my colleague, Amy Hulett, we will be moderating today's webinar. If anyone has any questions, feel free to use the Q&A tab below. So we'll be looking at questions that come in and try to respond to them as they come. Before I hand it over to Power TPO team and Michael to introduce Power TPO, I have a quick survey just to see who's on the call. So I'm going to run a quick poll, audience poll. So we would appreciate if you guys can take a second to answer that. So the poll is launched. So the question is, who here in the audience, we have close to 130 participants, is already approved with Power TPO and who is not? All right, so we have responses coming in. So I'm going to close the poll in 3, 2. They're still coming in, so maybe another moment. But thank you for responding to this poll. All right, so it looks like about 69% of the audience, I've ended the poll and I'm sharing the results. So about 69% of the audience is not approved with Power TPO. So again, we welcome you all. Thank you for your time. Hopefully you will learn something about our lender partner, how they work with their partners or mutual customers. And about 31% of you guys are approved with Power TPO. So that's a good pulse of the audience. With that, I'm going to share my screen. We have a few slides and I'm going to hand it over. So Amy, do you want to say anything or do we go to Michael?
We have so much to cover today. I'm just super excited to finally have this group together, and they put so much effort into planning this for us today. So I hope we have a great time. I know we will. But yeah, let's kick it over to Michael.
All right. Well, thank you, Amy and Harish. Appreciate you letting us join your call and everybody joining in. Look forward to spending the next 45 minutes or an hour or so letting you know a little bit about Power TPO, and then more importantly, diving into our panel. We've got some great industry veterans and experts in their field that we're excited to get some of their feedback on how they're navigating through this challenging market, what they're excited about for 2024, and what some of their plans are, just having some great discussions. So first off, introduce myself. I'm Michael George, one of the founders here at Power TPO, and been in the wholesale space for about 25 years. I've got into the mortgage industry right out of college and have been wholesale TPO from the very beginning. It's kind of my passion. It's what I love, and it's what I've always focused on. So want to introduce a couple of other members we have on our team here from the Power side, and then we'll introduce the panel here in just a few minutes. But we've got Bridgette Dobson. She's with us. She's one of our director of sales, and she's up in the Chicago area. And, someone to me has been focused on TPO from the very beginning, been doing this, since the mid 90s. And then we've got Jeff Lockmandy, who's also been with us from really the very beginning. And he's in the Atlanta area, and he's been doing this since the mid 80s. So he's got a lot of experience that we're really glad to have him on our team. And then we've also got Mike Grimsley, same thing. He's been doing this for 30+ year veteran of the industry. And, we worked together in our previous life. So Mike and I worked together for, I don't know, almost 20 years now. And he's with me. I'm in the Dallas area. He's a little bit south of me in the Austin area. So we'll hear from more of them in just a few minutes. But, before we get started, as the poll showed, almost, 70% aren't currently set up with us. So wanted to just take a few minutes and, who is Power TPO? See, we got a couple, really loyal customers on the call with us, and we're really appreciative of that and appreciate your support. And then, some of you, maybe this is the first time you've even heard of us or seen our logo. So I want to just take a second and let you know, what we're all about. And so we are 100% TPO focused lender. We're focused on our broker partners and helping you all achieve success through aggressive pricing, great service, and a simplified process. And I know, a lot of people say that, but our motto is people, process, and partner equals power. And everything we do, surrounds that. And when, Brett Arsta, my partner and I, when we first launched this almost 2.5 years ago, and I know so you know Brett, he's been in the industry since the early 90s as well. He actually started out as a broker. He was a broker owner and had his own brokerage shop for, several years in the Nashville area, and then got into the wholesale lending side. So, like a lot on our team, has been 100% TPO focused from the beginning. We thought about people. We wanted to put together a team of individuals that believe in the TPO channel, believed in the broker community, and that was their passion. And so our leadership team has over 150 years of TPO experience. For most of us, this is what we've done from the beginning, and we truly believe in the TPO space and are completely focused on that. And so everyone we put in our leadership team, fits that mold. And then, from underwriters, closers, everybody we hire, we want to make sure that they're fully focused on TPO, and that is their passion as well. The next thing is the process, and we think about the process, we got to keep it simplified. And so we use a lot of very, well-known technology that most of you are familiar with. We believe that makes a simplified process. It also keeps our costs low. And if we keep our costs low, then that equals to a lower cost for you and ultimately a better rate for your borrower. And, we realize, especially in this market, how important that is. So that's something that we're always focused on, is how can we provide, how can we keep our costs low to give your borrowers the best possible price. And then, lastly, it's our broker partners. We realize without you all, we won't be successful. So, any decision we make is, how does this affect our brokers? How does it affect loan officers, processors, everybody involved in the process? And, it can be a complicated business at times, a lot of rules, a lot of regulations. We always want to do things the right way, but also how can we streamline the process to make sure, we're helping you close your loans as quickly as possible. So, that's our people, process, and partners, and it's what we build everything around. And so when we launched in the beginning of 22, we partnered with Lower LLC. They're our parent company, and they've been a great partner of ours. They're fully committed to the TPO, to the wholesale space, and they're in the mortgage space, 100% mortgage company. That's all that they do. And they believe in our vision and our future, and then they realize that the value that brokers in the TPO space, holds. And so that's been a great partner of ours. And we often joke about, we launched in 22 in the middle of, one of the toughest markets that most of us have ever seen, at least in the last, I'll call it 20 years or so. But it's helped us be super focused from the very beginning. We knew we had to keep our costs low from the beginning. We knew we had to have a very simple process, and we had to have great service if we were going to survive. So it really made us sharpen our pencils from the very beginning and give great price, but along with great service and again, an easy process that can help you all close your loans on time. So everything we do is kind of built around that. So with that being said, I want to turn this over to Jeff and Brigitte, and they're going to dive into just a little bit more detail about Power TPO, and then we'll get to our panel here shortly.
Hi, I am Brigitte Dobson, Director of Sales at Power TPO. And Harish, if you could just moved to slide 4, that'd be awesome. As you can see, thank you. As you can see, we're a national lender. We've got you covered in all states except New York, Hawaii, and Alaska. And as you know from Michael's introduction, we are a 2-year-old wholesaler, but we did spend the first year concentrating on building out our national presence. Our strategy is to have local account executives. Why? Next slide, please. Our local AEs are well-versed in both our non-delegated and broker business. They have extensive networks within the community, so they can help you facilitate connections and partnerships that can benefit your business. Their proximity also enables swift responses to urgent matters, ensuring timely support and problem resolution. Relationships are very important to us, so we don't want to disrupt our partnership by switching AEs every few months or so. They are the keys to yours and our success. And at Power TPO, we live by the mantra, if you are working, we are working. And I have a little story about this. We had a broker that wanted to register a loan with us at 9:30 p.m. at night and currently didn't have logins to upload to the portal. The AE contacted the manager, we got login code set up, and the loan was registered and submitted all before the next morning. We still have open markets too, and we are actively recruiting A+ account executives.
Next slide, Harish. Thank you. Hey, I'm Jeff Lockmandy. I'm the Director of Sales with Power TPO. Working with a familiar team is important. We have dedicated account managers that are paired with you and your AE. This provides you with the reliability you require for every file you submit to us. Our dedicated account managers understand the different nuances in each market. Bottom line, we want to make sure we understand your local market as well as you do. Your account manager is your quarterback of the loan process here at Power TPO. They take control of your file after initial underwrite to ensure your loans get to closing table quickly and on time. Their job is to keep you on track and so you can hit your closing dates. They are also here to gently remind you that your conditions are still outstanding on your loan when your closing dates are fast approaching. Power TPO's strategy is to have 100% remote employees. That means we are located in your local markets. Next slide, please. Our technology should be familiar with you. We are fully integrated with our partners at ARIVE, which means you can rely on data quality and pricing accuracy. For pricing, we're available through Loan Sifter. And in the next few weeks, you'll be able to see our pricing through Lender Price. If you are on Loan Sifter and want to see our pricing and currently don't, you can choose us in the admin section under the approved available investors. Our portal is TPO Connect. Several wholesalers use this option through Encompass, so it should be familiar to you and easy to navigate. We use Rigora as our AMC management tool, collaborating with them to oversee your appraisal order requirements. And finally, we want to make sure you're aware of our mortgage insurance pricing. We offer 5 options for MI if you price a loan through our portal. Currently, ARIVE does not give you our best X pricing for MI. So your best bet is to get with your AE and they will show you how to get the best MI rate available for your customer. Finally, we're delegated with all of our MI partners. Next slide, please.
Our broker portal allows you to run dual AUS. We are approved with most credit vendors to provide a seamless Freddie transaction. Regarding appraisals, we are approved with 25+ AMCs, but if you don't want to work with an AMC, we do allow you to set up your own appraiser panel in your market. Please let us know if you have any interest in getting one set up, and we'll get you the requirements needed for that. And if you're a non-delegated correspondent, you can use an appraiser from your own appraiser panel, or you can use your preferred AMC. You don't have to use one of our approved AMCs. Next slide, please.
Talk a little bit about our programs. With our products listed above, you'll find typical agency programs comprising of the most common loans you see every day. Our objective is to be your experts in these loans. A few of these programs listed you may not be familiar with. Those are CHFA and Metro DPH. Those are for properties in Colorado and Denver. MBOH is for properties in Montana. We do allow down payment assistance programs that do not require investor approval or designated servicing rights. Next slide, please.
We understand the importance of ensuring your borrowers receive consistently aggressive pricing. And at Power TPO, our strategy is to guarantee just that. We don't have a fancy corporate ivory tower, so we are putting our best effort pricing forward daily. We have one national rate sheet, so there's no bait and switch with us. We don't price Fannie Mae or Freddie the same to you since they aren't priced the same to us. We're giving you the best price on every product we have. We do see quite a few investment property transactions, and we allow up to 5% in points and fees for those transactions to pass QM. We just require a business purpose certification to be signed by your borrowers. Borrowers are more likely to return to loan officers when they know that their loan officer has their fiduciary interest in mind, being offered strong and fair pricing. They will return for future mortgage needs, leading to increased customer loyalty and retention, and they're actually creating a referral network for you. Lenders with consistent and competitive pricing helps you to establish a strong presence in your market, attracting a larger pool of realtors and borrowers. This consistency fosters long-term relationships between you, me, and your borrowers, leading to sustainable business growth and success. Next slide, please. All of our underwriters are government underwriters, so we have the underwriting power to get your loans approved. From FHA to VA to USDA, we can get those deals done. Their experience and relationships with many of the agencies allow them to be experts in assuring we will get your loans closed. Because of the seasonality of our underwriters, we are not afraid to tackle your income challenging files. From self-employed to traveling nurses, we use common sense underwriting. Our underwriters condition to the AUS findings. We do offer government manual underwriting and have no overlays in pricing or guidelines for those transactions. Next slide, please.
All right, let's talk condos, one of my favorite subjects. I want to share with you a story that will show you why I love our condo team so much. Recently, an HOA refused to fill out pages 6 through 9 on the agency condo questionnaire. Those questions are pertaining to the deferred maintenance and structural deficiencies in the condo project. One of our competitors would not approve or review this condo since it was listed on the Fannie Mae's CPR as unavailable or unwarrantable. The broker did have the meeting minutes from the HOA, and they sent that information along with some updated information on the insurance for us to review. We approved that condo project, got it back to warrantable status, and we closed that loan last week. Also, we're not afraid of FHA spot condos, which are now known as single unit approvals or SUAs. If you have one, we have great resources for you and we're here to assist. We'll also do DELWRAP approvals and we'll also work with you on any new condo project approvals. As a quick reminder, there are differences between Fannie Mae CPM and Freddie Mac's PAR guidelines. Just because Fannie Mae project isn't warrantable, it doesn't mean Freddie Mac will not consider it as a warrantable project. Have a question on the condo? Send us the info. We'll review it prior to you submitting the loan to us. If you'd like help with your next condo, please let us know. Next slide, please. We'll talk a little bit about our closing team. Our closing process with us is automatic. I like to call it automatic, which means basically all you need to do is request the CD after your loan is approved and we'll take it from there. Good news, there's no appraisal required to request an ICD. You are good to order it as long as you have your loan approved and your loan is locked. We know it's important for you that you work with the same closer throughout your entire closing process. That is why you will work with the same individual from ICD to CD to balancing and then to final docs. No handoffs to different departments to get you through your closing. One important item, we fund all of our purchase transactions the day before your closing. That means your funds will be at the closing table waiting for your borrowers to sign and close. Next slide, please. Quick summary here before we turn it over to our panel. Wholesale mortgage transactions can be complex, especially in today's market. Our experienced ops staff understands the nuances of these transactions and can navigate them effectively. We'll pick up the phone, we'll talk to you when we're working on a challenging loan together. We are here to close your loans. We also have an open door policy, meaning you can talk to anyone at any time at our company. We have no offshore personnel. Everyone here is US based. You know who touches your files. We also know you need strong relationship with your lending partners, and we want to make sure you know our ops team by first name. Most of them you may already know, since our ops team averages over 20 years experience, and all have worked with top wholesalers in the past. That diversity and experience also allows us to learn best practices from each other, which makes us a better company. We are currently averaging 15 days from submission to clear to close. If you need to get a loan closed fast, we can deliver. Bottom line, it's not about one loan. It's about making you look good and your referral partners and customers. Our number one goal is to make sure your loan closes on time. We understand your needs, the stress you are under to close loan, and to keep realtor and your referral sources happy, which are the services you provide. If you lose that source, then we lose you a customer. We want to make you look good. That pretty much concludes our presentation. I want to turn it over to Mike Rimsley for our panel. So Mike, it's all yours.
Thank
All
you,
right,
Jeff. Yes, sir.
So I also wanted to give you a shout out to you guys, for this wonderful presentation. And there was a talk of ARIVE, like you guys are on ARIVE, you're a great partner. Since 70% of you are not approved with them, we recently released marketplace pricing. So if you're on ARIVE, you're pricing a scenario, you will find Power TPO for every scenario you price. So there is a marketplace tab. You guys can find them, look at their rates, what products are qualifying, and then sign up with them. So that's an easy way to sign up with them if you guys want to sign up with Power TPO. But go ahead, Mike.
Thanks, Harish. We do have several veteran industry experts joining us today as part of our panel. We have on the panel JP Davis. He is broker owner of JP Mortgage Company out of Louisville, Kentucky. He's been brokering since 2001. Shane Lester, he is also broker owner of Wonder State Mortgage out of Arkansas. He's been brokering loans since 2003. We have Jamie Brown, also a broker owner. He runs Compass Mortgage out of Lakeland, Florida. Been brokering loans since 2002. Terry Harper, she is with Harper Mortgage Group. She's out of Springfield, Missouri, and she's been doing loans since the year 2000. And then finally, Corey Cook. Corey is with CTC Loan Processing, providing third-party loan processing across 9 states. So very glad to have these panelists join us. Do please note the experience on this panel. Most all have experience since 2003 or longer, and all participants on this panel have an in-depth knowledge of the mortgage business, and they all have immersed themselves, no matter the type of market, whether it's purchase or refi, in this business. So welcome all. I guess we can get started right with the questions. I thought we might start with some industry-oriented questions, so we can dive right into the first question kind of planned here. JP Davis, you and I were talking about business strategies in the mortgage business just last week, and I thought that maybe we could lead off that discussion that you and I had. How has your business strategy shifted in the past year?
Yeah, first of all, thank you all for inviting me to participate. It's definitely an honor to be here. As far as business strategy goes, we're certainly witnessing a significant strategic shift with a more heightened focus on customer retention. Increasingly, we seem to be encountering situations where loans closed with our business partners and they're being serviced by others, which is generally acceptable. However, when these loans get sold to lenders that have a stronger retail presence, they often want to reach out to our customers for refinancing. Thus, it certainly, as a business owner, crucial to ensure that our interests align with the lenders that we're going to engage with. This issue is more prevalent than ever, so it prompts a more proactive approach from me as a business owner to not only our loan partners, but certainly my loan officers, to keep them informed. So my loan officers must exercise certainly greater caution in their marketing contact strategies to stay ahead of these developments. We certainly, as everybody does in this panel, invest considerable time in acquiring customers. So when you discover that a lender we've worked with sells the servicing to a select few, it's not only detrimental to our business, but also strains our relationship with the lender. So I think it's important to make sure that you have that balance on both sides of the equation.
Thank you for that. Shane, you want to chime in?
And Mike, you're talking about some strategy shifted in the last 12 months, if you will. A couple things come to mind to me. He said, JP mentioned client retention, right? It's so key. It's not just keeping our client or getting new clients, it's keeping our current clients. You can talk about partnerships and networking, right? I mean, I just want everybody to know, don't miss the opportunity that exists with the listing agents on these purchases. Sometimes your 2 or 3 contacts with them will be more communication than what you'll see sometimes from the people they refer to. So next thing you know, we have new listing agents we've never even met before that are now sending us business because they said you communicated more with us than the other people did. And then operational efficiency is another thing that comes to my mind. And I'm not doing this because ARIVE is here, but ARIVE has changed my entire operations from a loan origination system where I can do the application on the phone. I can do the pre-approval on the phone. I can update the pre-approval on this. It sets up so many different ways where I had the original systems that we're all used to using, but ARIVE has helped that operational efficiency, not just on cost, but on time as well. So those are some of the strategy changes that we've seen change in the last 12 months.
Great points. Jamie, anything to add to that?
Yeah, I would echo what Shane said. You know, the big thing is we have to be proactive right now. Now's the time to pick up referral partners. The realtors aren't very busy right now. So our operational strategy is to just go out there and meet as many people as we can, create new relationships, take advantage of the fact that they will take your call right now because they need help. So pursue the realtors in your market. If you don't have software that lets you see what the real production is, like MMI or RETR, that's a great investment to do some data mining and figure out who the best partners could be in your market. Get that realtor production in your hands and then go after them. One thing we've learned is the biggest and best realtors in your market, people are scared of them and they don't call them. They're not getting called. You are a professional broker. You have something to add value to them, to teach them how to be a better realtor, to teach them a better way to sell a house, better way to finance a house. You're bringing value to the equation. So share that value. They'll take your call.
You know, that is a great segue into our next question. I think, Jamie, you'd mentioned last week that you were on another panel or a conference call with realtors, I believe this morning. What is that strategy in dealing with realtors in your market? And, you know, lately with the changes to their new commission regulation, was that something that was talked about on that call?
Yeah, it was actually, it was a brunch and learn here at our office. We hosted 30 realtors this morning and I just talked to them about how to be ready to sell themselves once the rules come out. There is no need to get wrapped up in all the drama of what's going to happen, what's going to happen, what's going to happen. And, you know, it reminded me of us waiting for the Dodd-Frank rules to get finalized and come out in 2012. You're just borrowing trouble. There is no need to be worried about what's going to happen in July because we don't know what the rules are. So learn today what it is that makes a realtor the best realtor they can be and why they're of value to a buyer, and help share that to your realtors. We came up with a list of 96 things that realtors do for their clients, shared that with them this morning so that they're ready for a new type of meeting that they've never had to have before, where they're going to sit in a buyer meeting and sell themselves and what their service is so that they can get them to sign a buyer broker agreement, whatever those rules end up looking like, so that they're locked up with that buyer to collect their 3%. It's no different than the listing listing appointments they're used to taking now, where they go and they have a presentation and they're able to tell them, here's what I do, here's how I bring value. So I think right now you just share everything you can learn about what a realtor does and what their value proposition is to a buyer and why a buyer needs them, and you'll have realtors eating out of your hand.
Amen.
Yeah, I saw you shaking your head there, Shane. Anything to add to that?
Oh, no, we had a realtor yesterday, the first time that she's ran into this, and we had a lot of those same conversations, and she was just panicking, bless her heart, because she didn't understand, how am I going to do this? How do I go get the client to agree to pay this kind of money? Or do I just do it for free? And I go, I wouldn't know if I would do it just for free or not. But again, we don't know what the rules are, but it was one of those weird listings on the MLS where it said that the seller did not agree to pay for the buyer's fee. So control the controllables. We don't know what the rules are going to be. And so she sat down with them and made the offer accordingly with her fee built into that. So again, each situation is going to be a little bit different.
Terry, anything to add to that question as well? I'm sure you see a lot of realtors in your market.
Oh, she on mute.
I don't see the mute button on there.
Sorry, can you hear me?
Yes, ma'am.
I do think it is a shift in educating and supporting them and giving them the confidence of rethinking the way that they are approaching their clients and stating that you're bringing value to the table. Let's focus on this value, get away from the practicality of having to have an agreement signed, and just really focus on the value that they bring in this market, and know that the shift is going to happen. Everything's going to work out. And just give them as many tools as we can as lenders to support them during this change.
Thank you for that. Anything else on that important topic? Well, we can go back to Shane here. We had talked about also some, as part of, business strategy shifting, some borrower challenges that you're facing today in your market. How are you overcoming those particular challenges?
We're like everybody else. We're seeing a lot of high demand and low supply out there, right? Everybody's looking for a house. We're probably, my little brokerage, sitting on 50, 60 pre-approvals down here and just waiting on people to find houses. Some have been shopping for 8 months. Some have been shopping for a year. But all we can do is continue telling them the right house will come along, right? Just be patient. And in the meantime, that leads us right into the closing cost. And 3% sometimes doesn't cover all of it anymore like we used to see. Number one, we're seeing insurance rates go up a lot. Obviously, the interest rates, right? There's not a lot of building a lot of the closing costs into the premium like we used to be able to. But it also gives them some time to save the closing costs, because a lot of the the closing costs are not being paid by the sellers anymore like we used to see. We see it from time to time, but not very much, because we're seeing multiple offers. We're even seeing excess offers come in over listing price again. So that, along with the higher payments, and I'm hoping everybody's getting used to the interest rates, because, historically rates are great. If you look at that the little graph, you got the high rates back in the 70s and 80s. You got the low rate we had a couple of years ago. I mean, those, you just almost have to take those off the map and look at where we're going to be. That 5 to 7.5% range is where I think we're going to be at for a while. That's just a wild guess. There's no scientific data to that, but from what we're seeing, hopefully that's where it's going to stay. But hopefully the newness is worn off, where people will understand this is where we're at. And what's really going to be crazy is, we've all told people, as the rates go down, more people get in the market and you're going to pay more money for that house. So if you buy the house now, it fits in your budget, good for you. Get the house. If the rates go up, you look like a genius. If the rates go down, you refinance. But you get the house you want, and you didn't have to pay all that excess money for the house from the beginning. That's what we're doing to overcome some of these challenges we're seeing right now.
Corey, you process across, and you're on mute, Corey, but you do process across 9 different states, and you have quite the pipeline, you were telling me yesterday. So you're dealing with a lot of different loan officers. I'm sure you hear about borrower challenges through your many loan officers. You want to expand on that, perhaps?
Yeah, so I think that the biggest challenge that I find people are having is just the funds to close and trying to get it. I think
Yes.
that I'd say maybe 80% of my loans that I'm processing right now have gift funds that are having to be thrown into the mix sometimes halfway through because closing costs weren't what they were expecting it to be, or appraisals are coming in low all of a sudden, and that's messing things up as well.
JP, what are you seeing out there?
I think it's a lot of, and on a borrower challenges, but you know, I think a lot of it's adjusting to the diverse preferences that that borrowers have, that we have, that lenders have, and so you know, you have to definitely stay dedicated to educating your borrowers and making sure that they understand what programs are available, and certainly always be available. So it's not really anything new. You're not reinventing the wheel, but I certainly think these days keeping them educated is very, very important.
Go ahead, Jamie.
All right, so one of the things that's been really helpful for us is utilizing the 2-1 buy down. And you know, you've got people who are really reluctant to let go of an interest rate they have from a couple years ago, and we've been really educating all of our realtor partners on the listing side to go ahead and market their property with a 2-1 buy down listed in the MLS marketing notes, forward facing to the consumer, not just in the realtor hidden notes, where the buyer can see that the seller is offering, and we're telling them, don't even call it a seller concession, call it a buyer incentive, because that's competing with new construction. The new construction is moving. It's the resale market that's not moving. And we've been teaching the agents to use the same language that the builders use and calling it a buyer incentive, and selling that house with the 2-1 buy down. We'll tell them, go ahead and offer a 3% buyer incentive. 2-1 buy down is going to cost them about 215 to 225 basis points, depending on the deal. And they can bundle the rest of that into a few closing costs. And now they're going to see a payment that's way more attractive than they would have seen. And they're actually going to make a buying decision. Particularly, you know, the media is helping us out, not so much the last week, where, you know, there's some talk over the last week that perhaps they're not going to start lowering interest rates. And that's, I'm going to start choking people out here soon if that doesn't change. But you know, that media message of, hey, rates are going to come down, rates are going to come down, has really helped us sell those temporary buy down products and really get some stuff moving around here.
Jamie, you brought up a good point. Can I a little bit ask you more? Like, you know, there was this whole idea of refinance boom coming later this year. Rates will go down Q3, Q4. Now, like you were saying, now we are hearing rates are not going to go down. This may be an extended period of 7-8% kind of a market rate. How do you guys feel about that? Like that refinance boom that was supposed to come. Do you all feel from a lender perspective and a broker perspective, it has been pushed to early next year, or you still think there'll be rate cuts given how the economy and job market and inflation stands? Or any thoughts from the panel on that? And does it impact anything you do on a day-to-day basis, or you're just hustling out there, getting more business?
I still think the shoe's going to drop at some point, Harish. These rates are going to affect the economy. Commercial production has stopped. And eventually they're going to see those numbers. They're going to stop looking at false numbers. They're going to stop looking at false job numbers, and they're going to catch some freaking sense, and this thing's going to end.
You know, obviously that has to do with rates. You know, obviously there's many facets to the mortgage business, from not only rates, but the cost and fees associated per loan, service, speed. You know, back to kind of the realtor driven conversation we're having and the purchase market we're in. You know, I think Terry, you were talking about how speed is important to you in a purchase market in your deals. Are you doing anything differently to make sure you're meeting contract deadlines?
I mean, I think getting back to the partnership of the vendors that we work with is key. That speed to respond, I think, has been really pivotal. I think as a broker, I'm being extremely selective as to who I'm working with because of that exact statement of just that speed and being able to depend and rely on the people that you're working with. You know, we all have terrible deals right now. I think deals are few and far between. Really have to do a deep dive on our experience to figure out, you know, think outside the box. How are we going to be able to get this to work? And then the secondary part of that would be finding that partner that we know we can communicate, we can pre-vet, we could talk to an underwriter, we could talk to the AE, we know we're all in it together. And then that speed, the speed is huge. Being able to submit a file and having within 24 hours feedback on it, or gosh forbid if there's an issue, we can actually speak to the underwriter and work with the underwriter and be proactive and try to get things back on track immediately versus, you know, as we all know, retail chains, it could take up to 3 weeks to get that loan into underwriting. And then, and then based on what the outcome of that file is, it's very difficult to pivot and be proactive. So I think just speed in our operational processes, speed in our communication, speed in, again, getting to operational, which should be underwriting and processing, is really key right now. And being able to close within 7 to 15 days is huge. Our competitors in my market aren't able to touch that.
Great
Can I say
point.
something? Oh, sorry, Mike.
Yeah, JP, no.
I think it's crucial to make sure that you establish proper expectation levels right from the beginning, and then it makes the process go a lot smoother.
Absolutely. And again, just keeping the communication with all parties, listing agent, buying agent, the client, staying on top of, you know, getting the docs in, getting the disclosures out has been huge. And all that up front that we do does definitely help expedite things on our end as well.
What about you, Corey? You know, dealing with so many different brokers across several states, you know, what's important to you when choosing a lender?
So for me, even though I'm not the one that necessarily chooses the lender, because the broker is the one that's registering the loans, I find that the lenders that I have the most success with as far as getting a loan from start to finish is somebody that is good with communication. I know what to expect. And that's why I recommend Power to a lot of my different brokers, just because I know how smooth the process is with Power from start to finish versus some other lenders. Even just like something as simple as requesting a CD, I can go in Power, I can click a button, request a CD, I'm done, versus spending 10 minutes filling out a form, which it's only 10 minutes, but when you're running 40 loans a month, those 10 minutes start to add up. Or ordering appraisal sometimes can be very time consuming depending on the different portals. And so for me, it's definitely just the efficiency. And the communication with underwriters is huge too. If something's not getting cleared, being able to communicate with the underwriter, okay, what's going on? Why didn't this get cleared? What do I need to get? Versus just it being reviewed and, you know, no communications, because there are different lenders that I find that don't let you communicate with the underwriters, which is very challenging.
Thank you for that. Shane, I saw you shaking your head again. What's important for you when choosing a lender? You are on mute.
I am mute. It is crucial that we get to talk to these underwriters and get clear conditions and be able to request a CD without going through 40 different things. I mean, you can use more technology than is required in this. You know, when we request a CD with Power TPO, we know the underwriting or the closer is going to get with the title company. They're going to get that zeroed out. They're going to get it balanced. We're going to be good to go on that. They're going to get documents out. You know, there's nobody going in there changing something and changing our closing documents at the last minute that throws off, and the clients have to come back in and re-sign. And sometimes that's happened with some other vendors, but with Power TPO, I mean, you got the competitiveness with the rates and everything. You've got the people you can get a hold of. You've got underwriters that give you clear conditions, and they're not trying to over condition you. And once you learn their process, what they've got, it's pretty consistent. You know what you need to send in. And I got that old, Jeff, tell them, I got the old straight submit to clear to close, right? submission to clear to close, that old albatross. I mean, it's the first one I've had, honestly, in 20 years, no matter how good I think I am. To get that was actually fun. And I told them, I said, hey, I expect to get the clear to close. They're like, yeah, right, whatever. We all expect to get the clear to close when we submit a file, right? But it's awesome when you know the system and it works and you have people responding to you when you need help.
I will also say too, that the great thing that I've seen with Power is being able to balance the CD prior to, because sometimes you are so tight on funds and those borrowers, I mean, we are literally pinching pennies and we can't always afford to balance after a CTC is issued. Sometimes it has to be done before to make sure we have exactly what we need. And that's been huge.
JP, anything to add to that?
No, I think everybody knows it's a competitive landscape. And to me, one of the most important things is just maintaining a strong relationship with the lender you have. So you understand their programs, they understand you, they have competitive pricing, because we want to be sure we can accommodate all potential business. And if we can't, and which Power TPO allows us to do, then they'll certainly seek out alternatives, and nobody wants that.
Absolutely. Jamie?
Yeah, I mean, a dear friend of mine, David Rivers, once told me that the relationship is everything. And, the relationship is the thing with Power. I mean, it's not a behemoth. There's approximately 0.021% of the employees at Power as there are at UWM, and you get to know them.
Perhaps we can invite Mr. Rivers to our next panel.
I think you should.
He'd probably love to be here. He'd probably love to be here.
Probably so.
Mm-hmm.
Hey, Terry, what do you look for when choosing a lender?
Well, I mean, everything. Don't we always want everything as a broker? But I'll try to condense that statement. So I would have to say the number one thing for me is a partnership and really having a 50-50 relationship with the AE. I've dealt with just about all of your underwriters. Every one of them is so approachable, so proactive. I appreciate that so much. Being able to talk to the AE and gosh forbid they pick their phone up. I mean, these are little things that make big differences when you're, needing an immediate answer or an issue with something. I've dealt with the closing team. I mean, every single employee that I've ever dealt with has always been professional. And the biggest thing that I don't think I've heard is the consistency. Every single file that I have from start to finish from a professionalism perspective has been absolutely consistent. And I appreciate that so much. There's no surprises when I deal with Power TPO ever. So I just really appreciate that partnership though. I think if I had to summarize all the things that really make our job so much easier, it's just the consistency and professionalism and true partnership.
Thank you for that.
And can I follow up? Sorry.
Go ahead.
As a processor, I love when an underwriter will call you in the middle of their review if they have a question about something. For me, that's huge because to get a condition list come back to me where I know I've already done something or I know everything's documented in there and then I have to go back into the turn time queue is so frustrating. So when that underwriter has a question about something, they'll pick up the phone, they'll call you. I've had people call me at 9:30 at night sometimes because I am working at 9:30 at night sometimes too. We all are. Just to be able to, clear some questions up that they may have, that's huge.
Great points. It looks like we're right on time. I think we have room for
we have a few audience questions, and this was a great panel. Mike, thank you so much for hosting it. I think we had some amazing discussion. So there are some audience questions primarily for Power TPO, but I would like to get the entire panel's view, including brokers and processor. One is about, are you guys seeing TBD underwrites in the market, given how tight the markets are? Do you see TBD underwrites happening, and does Power TPO do TBD underwriting?
We do. We do them very well. They are full-blown underwrites. Sometimes you do have to manage capacity when you're dealing with TBDs. But yes, to answer your question, we do full-blown TBD underwrites.
And our broker partners seeing, agents are more excited if they get a full underwrite or a TBD underwrite, or pre-approvals are good enough given how hard they are to get. So did you guys use them today?
I mean, it kind of depends on it depends on the loan officer and how they're structuring the deal. A pre-approval is not as valuable as a full underwrite. But again, it's you know, us salespeople, us AEs, understanding our customer and you know, making sure we answer their questions up front. You know, some TBDs don't even need to be a TBD. So it's up to our, you know, up to our judgment as an AE, as an account executive to scope that out. But it is valuable, especially in a purchase market, to be able to offer a full-blown underwrite.
To be honest, I've never, well, one time I've been asked for a full-blown underwrite for a pre-approval letter. So I don't know about the other panelists on here, but I mean, we kind of know if it's going to go or not. And if there's any question, we'll run it and make sure. So
I'll make a quick comment on that. We have done a pretty good job of, most of those are income related. When you have challenges on TBDs, we have a scenario desk that we use that we can actually send in tax returns and focus on the income or the challenge we have in approval. Take a good solid income calculation, run it through AOS. You're pretty much good as gold. So we do a lot of those too.
good stuff.
Yeah, great point, Jeff. There was another question. Again, I'll open it up to the panel on non-QM. So like for brokers, are you seeing a lot of, I mean, we talked about buy downs. They've been pretty popular, just as Jamie mentioned, like it's an incentive and the agents still get their full commissions, but the rates get lowered. Are you seeing non-QM programs also being used quite a bit? And I think the other question was for Power TPO, like do you use Fannie Mae's guidelines on appraisals for non-QM? Does anybody want to chime in about how non-QM is helping you guys?
Bridget, you want to comment on that one?
Yes, currently we aren't doing any non-QM products. So we are strictly agency, Fannie, Freddie. And we do on the agency and government products, we have no outstanding overlays. So we pretty much follow the AUS findings on Fannie and Freddie. So I can't answer the non-QM question, so I'll pass it on to one of our panelists.
I saw Mike George.
I'm not seeing
Oh, go ahead.
I was just going to say, I'm not seeing an uptick in QM products, even with market conditions right now. I think we all probably can agree we may have, you know, 1 out of 100 that it may be applicable for, but for the most part, we're still doing just traditional qualified mortgages.
And especially like Terry, you said in this purchase market, you know, agents are more comfortable if they actually see an offer, which is kind of, you know, the pre-approval is more on a standard conventional program. So that's kind of even what we are seeing. I think that there's another question which I do want to bring up. I think costs have gone up in the market. So the Darshit is asking, you know, the underwriting fees and the fees from the lenders are all going up. Any comments and thoughts? Like, do you guys see, like, given how rates are, where economy is, will the wholesale channel fees keep going up? They used to be $600-700 the last I remember, maybe several years ago. Now almost every lender is, you know, north of $1,000 in my last remembrance. So do you guys see those, because it adds to the bottom line? I think like the panelists mentioned, you know, borrowers are really tight on funds these days. You know, cost to close becomes really important. Do you guys have any opinion on where fees are headed? Will they remain like this or will they go up? Maybe Mike or Michael, if you have any thoughts.
Yeah, we've been,
On
you know,
tomorrow's CPI report, right? No, I think Michael is probably better versed to answer that one.
I was going to say, yeah. So when, you know, the last 2 years we've been able to hold our fees steady, you know, we're one of the ones we're right at 1,095. So we're just over the 1,000, which seems to be, you know, pretty much in line with the rest of the marketplace. You know, obviously we look at that every month, every quarter to see what we need to do, but we've been fortunate to be able to hold it steady at 1,095. You know, there's no plan right now to raise that. We feel like with our current structure, we can, you know, make the model work with where it's at. So, you know, whether it's an admin fee or built into back margin, you know, it's an expensive business. Compliance, regulatory requirements over the last couple of years we're all aware of obviously make this a very expensive, you know, lending environment. So that's where we try to watch every penny that we spend and every decision we make so we can't keep our fees low. So we're definitely aware of that. You know, we pay attention to it. And, you know, again, whether it's in our margin, our rates, or our admin fee, at the end of the day, we just try to keep our costs as low as possible. So there's no plan right now to raise that admin fee.
Hey, Haresh.
Michael, can I piggyback on that?
Go ahead, Terry. Go ahead, Terry.
Yes.
Yeah. Just coming from the retail market, because you did kind of have that layered question on retail versus wholesale. So I can tell you, based on just the broker admin fees, they are collectively lower than retail. Retail typically is going to be anywhere from $1,500 to $1,800 on base fees. Granted, they will break them out differently. But as far as our overall upfront cost going broker division, I am seeing that it is absolutely lower. And as we all know, the cost of doing a loan is exponentially more than in the last couple of years. So I'm noticing we're definitely having to educate our agents and let them know days of getting a loan done for $5,000 are long gone. But yeah, the broker channel is definitely cheaper if you have any retail folks on this call than, and I've been with some of the biggest retail lenders in the country. So
yeah, we see that as well. It's not even just the cost, it's the average just rate that borrowers receive. When we pull reports by product, it's really across the board by product, retail versus the wholesale. The borrowers through the wholesale channel are getting a better rate, all else equal almost every single time. So it just proves the point that there's value for borrowers in the TPO broker space.
I would love to know what caused that attendee to ask that question. Is it because he's seeing lower underwriting fees? Because it's either going to be built in the rate or going to be built somewhere. So there is no free lunch out there. So, I mean, it's in there. And the 4 lenders I work with, TPO's right there. It's tied with the lowest one of the 4. So
Shane, we can raise it?
No,
Yes, sir.
no, that's what I was afraid of. That's what I was afraid of. Easy. Pump the brakes. Pump the brakes.
It's only
I'm making a
$15
note right now per Shane.
$15 per shave. Per shave that to me. Come on now.
All right, well, hopefully that answers that question. So.
Yeah, this was a fantastic discussion. Again, I want to thank all the broker partners and processors who showed up. Thank you, Power TPO, for taking the time to do all the legwork, get this panel organized. We had a fantastic discussion. This has been recorded. It will be available on ARIVE's YouTube channel. So there'll be a permanent memory for this in incoming days. But again, I want to thank everyone. So Michael, did you give your contact information? If somebody wants to sign up, how do they get signed up with Power TPO? Is it?
Yes, definitely. We'll share all of our contact information. I don't know if you can pop up that last page of the slide. There's a QR code on there that if we can put that up real quick, I'll take you right to our website to get approved with us as well, or reach out to anybody on the call here, and we would love to talk with you.
Yeah, so I will share that, and let's see if I can get the sharing to work. Yes. So on the last slide, so if anybody wants to get signed up, you're welcome to take a screenshot. There's an email here as well, partneradmin@powertpo.com. They're a great lender partner of ARIVE. We appreciate their partnership and collaboration, and they're wholesale only. That's a big part, and how they operate, their mindset, their experience. So definitely give them a shot. With this, I want to, wish everyone happy rest of the day. Thank you. Thank you so much for your time.
Thanks, everybody. Appreciate your time.
Thanks, Harish.
Thank you, Harish.
Thanks.
Thank you.